morning. You're watching The Market right here in ET Now with me, Aisha Faridi, Nikunj Dalmia, Awan Dubash on the show. And let's just take stock of what happened overnight, considering it's a completely different picture by the time you wake up and from where you left it off. In trade the day before, global equity markets have seen a synchronized bounce up, as did us. So the Dow has managed to eke out a gain of about 1.25%. S&P has almost touched a 2% gain, and the Nasdaq has held out by about a solid 2.5%. The change in the 10-year yield, that also is seeing some amount of recovery, about a 3.5% uptick coming in. The dollar index is looking stable this morning. And Brent, in an acutely volatile move last evening, is finally settling just about around that $75 odd to a barrel mark. The big news, of course, is now it's First Republic. Wall Street recovered because of the rescue of First Republic, and the largest banks in the US are now moving to rescue this particular bank. In fact, 11 private banks, including Citi, JP Morgan, Bank of America, they're going to be depositing a solid $30 billion into First Republic. Of course, there was the US jobless claims data as well. They've fallen more than expected. So that is all that the market is reacting to. But this morning, the SGX Nifty, Nikunj, that's indicating quite a bit of relief to sore eyes.
Aisha, look, what has been the attempt by the regulators, at least by the US regulator and by the developed market regulators, that they're doing whatever it takes kind of an approach to ensure that the US financial system is not broken. Or the global financial system is not broken. So what may be called as a rescue, but I would say that it is quick reaction, good response, and something which is the need of the hour. Imagine if more banks would have had a run. I mean, imagine if more financial institutions had a run on their bank, it would have led to a complete contagion in just about all financial markets. So while we can breathe a sigh of relief and we can say that regulators and big banks are coming together to ensure that the spark which started with SVP has not become a wildfire, so to speak. So the problem in the market is not valuations, technicals, levels. It is about confidence. And is the confidence coming back that the financial regulators and the administration is really, they've got the back, they will act as a back support? The answer to that is yes. So for me, what really matters for next couple of days, it's not the Nifty level or what is happening to flows. It's about the general confidence in global financial markets. And I think with the attempt what first ECB did, then the Swiss bank did, and now Fed, they're simply trying to get confidence back. So I think it's excellent news that the confidence which had got completely haywire seems to be coming back. Then we can talk about levels and India strategy and Nifty. All that I think is passé. First and foremost, thankfully, touch wood, there's no contagion in financial markets. Imagine if there would have been no back support by global financial regulators. Chaos is an understatement. It would have been a financial Armageddon. We've learned from 2008 experience that one Lehman can really break the world.
So all the steps to shore up the banking system, dousing the fire, however you want to put it, that is what is really providing relief and confidence in the markets. Clearly, Wall Street cheering that news, ditto with Asia and the SGX Nifty. Let's talk about our own markets. Where did we wrap up yesterday's trading session? Well, at least we managed to put the brakes on that 5-day losing streak. So while it may not have been anything to shout home about, it was in the green. 16,985 on the index. You had us reversing those intraday losses. And the FNO trend, Nikunj, still indicates short covering. But at least for our markets, we managed to put the brakes on the losing streak.
You would play for a bounce today. And I think that's the right thing. While you can argue back and say that the durability of the bounce may not be very strong, but you would play for a bounce
because it's getting challenged day after day also every time we try to pull back.
No, when I say you'll play for a bounce, you will play for some gains today. I will not be surprised that if the global strength continues, you could be in for a good day for the Nifty. Look, what have we seen on Thursday and Wednesday and Thursday, that the market after a gap up start has seen sustained selling in the second half. Will that sustained selling today will not be there? I think it may not be there. Why? Because you've fallen in a straight line. The FI number is not that scary. The market are looking for a bounce. The technical side also are favoring that a little bit of bounce cannot be ruled out. So you will see a bounce. And now what you got to understand is that where the trade in the market would move. Do you lean towards financials for a bounce, or do you lean towards commodity consumers like IT, commodity consumers like to some extent autos and FMCG, largely because what's happening to international commodity prices because of fear of a recession, I think is also benefiting some of the companies. I would say banks would be in focus again. Rather than trying to go back to commodity consumers, I think banks today could be in focus largely because of the global setup what it is. So the mood has not become from bad to worse, Aisha. So I'm not saying that bad has become great, bad has become better, but the moot point per se for financials is not gone from bad to worse. Imagine if regulators would have not stepped in, we could have been staring at a very different picture. So that gives me the confidence that somewhere in the near term, which is today, tomorrow, if you're in trader, play for the bounce rather than selling the rally. Kunal's not there. I think he'll endorse the same, I'm assuming.
Yeah, I guess. And today seems like, at least going by the global setup, that it's going to be a more sustainable bounce. Not that every, uptick is going to get sold into, as has been the case in the past. But I think the big talking point from dinner table to coffee table conversations this morning has been the first ever change of guard at TCS. You heard me right. It's the first ever resignation that has ever happened in TCS's history. There's going to be a change of guard in almost late evening announcement. Rajesh Gopinathan has decided to step down as the MD and CEO, and K. Krithivasan is appointed as the CEO designate. He's going to step down to pursue other interests, is what he says, and he will stay put till September 15th. Now, just to give you a brief background about what Mr. Krithivasan's background has been, because he too is an old hand at TCS. In fact, he's currently the president and global head of BFSI, part of the global tech sector for the last 34 years, and he too joined the company back in 1989. So it's Mr. Krithivasan now who's going to be the CEO, who we will be interviewing after the earnings. Not just as yet, because Rajesh is still there till September.
Yeah, I mean, Rajesh, there is a press briefing by TCS 8:30, so hopefully I'm hoping that we'll get a chance to, ask Rajesh point blank that, by what happened? Why have you decided to move on? Age is on your side, the momentum of the company is on your side. You've done wonderfully well in terms of delivering and navigating TCS through challenging times like COVID. It's a bit of a surprise, and it's a bit of a, it is something which nobody anticipated or expected, frankly, Aisha. While TCS, you can argue back and say, has got one of the most stable top tier management, unlike a lot of other companies where in last 3 years senior management exits, including Infosys, Wipro, they I think have been a regular affair. TCS historically has enjoyed the most stable top management. My understanding is, and I'm sticking my neck out, is that we should not read too much into Rajesh's exit. I think it's a professional choice which we must respect. Under his leadership, the company has done exceedingly well in terms of margins, in terms of industry-beating growth, and reward to the shareholders. But what has surprised everybody is the fact that Rajesh did not wait for his tenure to get over. And is this a planned migration, or this is a sudden migration? That is what markets focus on. I think this is a planned migration because Rajesh will continue for another 6 months, and he will be hand-holding Mr. Krithivasan for next 6 months. B, in the past, when there was a sudden migration for TCS, when Chandra decided to accept the leadership role and the chairman position of Tata Sons, that was a sudden migration. TCS, I think, TCS did well because of the bench strength they have. So I think in terms of a succession planning, in terms of the talent what TCS has, I don't think there are problems and challenges. But for me, what really has drawn as an individual, as a professional here, is that here is someone who's CEO of India's most profitable IT company, the biggest company for Tatas, and the most profitable companies for Tatas, has really decided to pursue different interests. And that's
I'm
an
so
individual
curious to
choice.
know what those different interests are because, as his message was floating around that, he realized he'd been doing the same thing for the last 40 quarters, getting on the conference call bridge every 13 weeks, getting grilled by all of us here in the media, and that he'd been asking himself, when's a good time to find something new to do? So I'm very curious to know what is that something new?
Even I don't know. Even I don't know. And
You didn't see it coming so soon. I mean,
yeah.
everyone reaches that point in their lives, but
Yeah.
maybe not that soon for Rajesh.
Yeah, I mean, to grant it to him, he's got age on his side.
Yeah.
He's not even 50. And 50, if you are the CEO and you've been the CEO for more than 5 years, more than 6 years actually, for India's biggest IT company, you've steered it through the COVID highs
With
and lows.
ESOPs.
I don't think in TCS it's like Infosys or Wipro, whether ESOP is the large mainstay. I don't know. I'm not aware of it. But take the financial composition part aside. It's about an individual who wants to take chance in life and say, look, what's next? And that's just in professional conversation, a casual conversation we're having, three of us, that what's next is something which I guess it's an
I
individual
mean, it's
choice.
a point where I guess everyone reaches in their lives
Yeah.
at some
Some
point.
reach early, some don't reach, some are happy
Yeah.
with what they're doing. So for me, I think it's a conversation. I think what we need to understand is that was there a disagreement? That is what our viewers need to understand. Was there a disagreement between Rajesh and the board of Tata Sons? I think the answer to that is no. Will Rajesh's departure have an impact in the short term? Markets would like to seek more answers. Similarly, when Rajesh took over from Chandra, all of us waited for 2 quarters to really understand the leadership mantra of Chandra. So I guess that transition is something which markets would be focusing on. You can argue back and say that the sudden change of guard is happening at a time when the sector itself is getting bulldozed. It's getting bulldozed with
So it's not
slow
coming
growth.
at the right time in that sense.
Exactly. But that's the way it is. I mean, these are global businesses. They will always have something or the other. For me, this entire episode is an individual choice as a professional who's decided to pursue other interest. Now, the interesting bit is that if he joins other IT company, I don't know.
Yeah.
I mean, which is that other IT company? Will he be doing something else? I don't know. I don't have details. And that's something which has not been shared with us.
I guess in the next 20 minutes, we'll get a little more clarity. But he did mention in his statement that he's thoroughly enjoyed the last 22-year tenure at TCS and that it's been 6 iconic years, as he describes it, enriching and fulfilling, adding $10 billion in incremental revenues. All right, that aside, let's continue to focus in on all the news that's brewing across the globe. And we've got Dan Feynman, who is the co-head of Equity Strategy Asia Pacific at Credit Suisse, joining in. Dan, thanks so much for taking time out. We're looking at these rescues, time and again, shoring up the banking system. And the latest, of course, being First Republic. Given that we have seen these steps being taken, it certainly is instilling a sense of confidence among investors across the globe that the contagion effect is not going to be that harmful.
We've seen this movie before. The regulators have learned a lot since the global financial crisis in 2008. Back in March 2020, we had financial markets in the US come under a lot of pressure. The regulators stepped in very quickly, provided a lot of liquidity, and the problem disappeared quite quickly. We're seeing a replay of that. The regulators know now that you need to act quickly, that you need to bring the big bazooka out before the problem gets serious. And I think that they're going to have this under control.
Dan, I'm curious to understand the views on India and, your Asian Investment Conference, which is going to take place soon. The themes that you've actually picked up for the longer run, and they're quite intriguing. Let's pick up the first. Winners of a weak dollar. Who do you think fits best in that category?
Well, if we look at it from a stock market perspective, the markets that are more export oriented tend to do better because a weak dollar is actually good for global trade. So the likes of Singapore, Malaysia, Taiwan tend to outperform in an environment of a weak dollar. If you're looking at sectors, it tends to be, again, the sort of globally oriented sectors like energy, like materials, and commodities.
Do you think in terms of a confidence crisis which global markets were suffering with, especially after the SVP debacle, that confidence has come back, because let's say 24 hours ago, 48 hours ago, the fear in the system was that what if there is a contagion, what if regulators do not step in, what if there is another run on bank. Do you think a lot of these what if questions are addressed now?
I think that we will move past this fairly quickly. A key reason is that the problems with the banking sector in the US right now aren't about credit quality. It's largely a liquidity issue, and it's very easy or relatively easy for central banks to deal with liquidity issues. It's much harder to deal with solvency and NPLs. That requires more of an effort from the government, and that usually is lagging. So I think in this case, we're helped that the problem isn't that serious.
Dan, can't help but, be peeled towards some of the stock names as well that have been flagged off in the report. Falling income inequality, some stocks from India, Asian Paints, Indigo, Apollo Hospitals and Zomato. Walk us through the rationale for picking out a Zomato at a time like this.
Well, in general, we're looking for stocks that would be exposed to a rising middle class. The theme that you mentioned is that we've been seeing falling income inequality in Asia over the past decade, I should say emerging market Asia, India included. And that means that you get supercharged growth in the middle class. And the middle class, what do? They spend. So we like consumer discretionary as a theme.
All right, thank you so much, Dan, for taking time out and giving us a perspective of the news across the globe as well as your latest report, and all the very best for the upcoming conference. All right, let's move on. Chat Technical, CA Rudramurthy is with us and Kunal Bothra right here in our studios. Yes, Kunal, we did manage to snap the losing streak, but nonetheless, we're still sub the 17,000 mark. What's that indicative of? And given the healthy handover, where are we headed today?
Yeah, give or take 10 points from the 17,000 mark, which is still, I believe, a good closing for the indices. Last 2 days, we've seen, in fact, in the last 3 days, out of the last 3 days, there were 2 days of very strong comeback on an intraday basis for the markets. I think that's a standout feature for the indices, that till the time there is a fight from the bulls, and we try to protect a key support on the indices. That's an indication that possibly we are nearing a short to critical bottom on the index. Now, I flagged off the gap on the Bank Nifty a couple of trading sessions back, that how a closure of the gap on the Bank Nifty leads into a strong bout of recovery or a mild rally into the index. So I would still expect the same for the Bank Nifty. We've managed to close the gap. We formed a bullish hammer pattern yesterday on the Bank Nifty and almost a bullish doji pattern on the Nifty. So all of that indicates that we could be in for a near-term bottom and we should now be playing in for a bounce. The only catch is that whether we cross back about the 17,200 250 mark convincingly in this leg of uptrend, or whether we do it in a very slow and a gradual manner. So I believe that traders should now look out for at least 150 to 200 points further from what the SGX Nifty is indicating. So I would probably expect 17,200 to 250 as a near-term target, and then if there is any broader market recovery or large cap stocks recovering, then we can probably increase the targets higher.
All right, Rudra, let's get in your views then. What's the outlook on the Nifty Bank Index? That too has been coming under quite a bit of pressure, while yesterday, yes, they may have been, some of the large cap banking names that managed to hold out. We're looking at levels of 39,132. Where to from here?
Yeah, good morning. For me, Bank Nifty can head towards levels of around 39,800 on futures, and one has to have a strict stop loss of 39,400 now. My levels are very tight, in fact, because crossing that area of 39,900 to 40,100 range is bit tough for market. And if we only close above 40,100 on Bank Nifty future, then I say yes, this down move is already done and we might go up further. So we might now test 39,800 levels for today, and unless we cross 40,100, market will continue to be a sell on rise market. Clarity will come today for us on these levels.
Right, okay, let's talk stocks then. Kunal, on your radar this morning?
So buy calls, the first one is about Asian Paints. We discussed that how crude is going to a sharp correction. So Asian Paints is a direct beneficiary. The stock has headed towards a minor breakout in the charts, but I would believe that looking at the charts for Berger Paints, etc., even this stock should do a very strong catch up. So buy with target of 3,050, stop loss at 2820. And the second would be about SBI. I think this could be time that we could start betting on the PSU banking names. Canara Bank, Bank of Baroda, these stocks have formed a bullish hammer pattern. But I think the interesting part for SBI is that the stock is still reeling below the 200-day moving average. So if there is any kind of a catch-up of underperformance, it could be pretty much swift for SBI. So that's a stock which I would bet upon. Targets of 550, stop loss 515.
Right. Rudamurthy, what about your stock ideas?
I'm picking up stocks from NBFC, and for me, Bajaj Finance looks very strong. It has that support at around 5,650 to 5,700 zone. So for me, Bajaj Finance is a good risk reward trade to go long at current price. Looking at initial targets of 5,800, and one can have a stop loss of 5,680 for the same. And for me, Manappuram also looks very, very strong. It has formed that 108 to 110 band ka accumulation pattern. So for me, this 108 to 110 is a very, very strong support zone. Multiple times it has bounced from those levels. So keeping a stop loss of 110, looking at initial targets of 118 and 135 on Manappuram to come. So long call both on Bajaj Finance and Manappuram.
Okay, on that note, we're going to take a very quick break with news that it's been an overall across the board global market recovery that we've seen, and the SGX Nifty is well indicating an upside for us. Let's see where we head from around those 17,000 levels in trade. Quick break. When we come back, we'll hear it out from Rajesh Gopinathan as to what he has to say about his exit.
Agrawal joins us. Let's take our conversation forward and let's understand that what his read on Rajesh Gopinathan's exit is. Sandeep, good morning. Thank you for joining us. Analyze the stock impact for us. You know, while we can appreciate that the individual has a right to choose what they want to do, but frankly, when you take a decision which is such a big decision, and you're taking a decision at a time when in general the IT sector is getting bulldozed from all the sides. So do you think more than anything else, it's the timing of this decision which could really add volatility in the stock?
Good morning. Thanks for having me on the show. Yes, I agree with you that, this news has come suddenly. And despite the fact that, TCS is a big organization with structural things in place, and they are bringing Kriti, who is 34-year experience, and he's a very strong candidate, very knowledgeable, very well entrenched with the clients and all. But this is something unexpected. So when something unexpected happens, then there is some volatility. So I would not rule out that. But we also have to acknowledge the fact that as you rightly mentioned, that the sector has been bulldozed by all this recent news of American banking system in crisis and all that. So, there is a big hit which the stock has already taken. So I would say that there could be a minor volatility, and then, things will stabilize. Also, I would like to, add this fact that, what the previous management of TCS and the current chairman Chandra has very well established is TCS as a brand in the client markets. You see the big marathons happening in the client market over the last several years, taking off the premium spots from the competitor in terms of advertising in the premium airports in the client markets. All these things have established TCS as a brand. So today, if someone wants to do a big IT transition, they will look at Accenture, TCS, maybe with same glasses. So I would say it is now a very stable compounding ship. There could be near-term volatility because of the surprising nature of the news, but I won't read too much into it.
And I guess it could be arrested pretty soon, right, Sandeep, besides the knee-jerk, because Chandra is still there, remember that, and he's the one who's got his hand over not just TCS, but the rest of the Tata Group companies as well. His ouster, I would understand, but, maybe Rajesh could only be at best a near-term impact.
Yes, and also we have to remember that as of now, his tenure is there till September. So a smooth handholding will also be there. And let me tell you, I have met Kriti several times, and I know him extremely well from that sense. We have met him several times in the last 11, 12 years of my IT industry analyst coverage. I can tell you that, he is pretty hands-on with the clients and he handles the biggest segment for TCS today. And he has been in the system for like more than 30 years. So I won't see much business impact or operational impact, but yes, surprise nature of news, there could be some volatility, although I don't expect much volatility as well. That doesn't at all, undermine the great work which Rajesh has done. He has been a great contributor. He has handled the company in a very nice way as a CEO and before that as CFO as well. But as I said, TCS has established itself as a big brand and as a big organization. So, I think it is in a place where the organization has more bearing on the clients and the markets than an individual. That is the way I would put.
And, Sandeep, given the fact that we haven't seen many or perhaps no investor, interactions with him at all, what do you think the street is most looking forward to? Perhaps any sort of a change in strategy or a continuity from what, Rajesh had already put into place?
So, we will know more about it when, if there is an analyst day or something from TCS. But while, you are right that he has not interacted much with the investor, but at least with the analyst community, there has been last 10 years, there has been continuous interaction with Kriti as well. So the analyst community knows him extremely well. The investor community may have met him in pockets, but so whether there will be a change in strategy, I think, we will know only if there is a investor meet or analyst update or something. But, TCS is doing phenomenally well. So I don't think, you need to do big changes in the moving ship. It is a stable and moving ship. So I would expect continuity.
So if the stock falls today, will it be a buy then?
I think it is a buy with the correction which has happened on the back of the news in the US markets and the banking system. I would be surprised if there is a big move in the stock today. And even if it is there, I would expect that, it will stabilize during the course of the day.
Okay. TCS has been commanding a certain degree of premium, even though their growth, some would argue, has not really kept up to what analysts and markets have been wanting. Why do you think the stock is commanding a lofty premium to TCS, to Infosys and even Wipro?
So the answer is in stability. Investors always assign bigger multiple to stability. So if you see before yesterday's exit, only 4 CEOs have been there in TCS. So, it is a very, very long tenure which each CEO has been there. And even if the vertical heads, business heads, if you see, there has been very little churn. Everyone is there from 25, 30, 35 years. So it is a very stable company with a very, very, entrenched management. So people assign bigger multiples or more premium to a stable ship. Secondly, if you see their attrition numbers also, they are lowest in the industry for several years now. So, all those things gets a bigger premium. Also, we have to remember that it is much bigger in size when we compare the multiples to the second largest player. So the premiums are assigned because of all these factors taken together.
Okay. All right. Sandeep, really appreciate your time and thank you for joining us. Pankaj Murarka, good morning. Thank you for joining us. You can finish your call. I'll come to you again.
No, sure, I'm done. Sorry.
You sure?
Yeah.
Okay. Pankaj, I remember when Chandra decided to accept the new role of chairman of Tata Sons, the TCS stock the very next morning fell because nobody knew that what Rajesh would be able to deliver. Today, Rajesh has decided to move on and we are discussing what exactly 6 years ago we discussed when Chandra decided to move on.
Yeah, sure. I get what you're saying, Nikunj. Stock might have some knee-jerk reaction today, but I think what all of us have seen, meaning I can talk about my personal experience, having seen the sector for last 20 years, over 20 years, and having seen companies like Infosys, Wipro, TCS, large companies like these, they've built very deep management bench. And when these companies at that scale are growing at such a high rate, they have, in my engagement with these companies, I have seen that they have a lot of leadership, at the tier 2 and tier 3 levels. And meaning you look at these companies, they've given us so many industry-wide CEOs. A lot of business heads in Infosys are actually CEOs of companies across the sector. So while the stock might have a knee-jerk reaction today and could be down a couple of percentage points, but I don't see it having a meaningful impact on business. And more importantly, for TCS as an organization, my experience over the years, having seen this company for now 15 years since their IPO days, it is a very process-driven organization. So I don't want to dilute the impact a leader has. It has a meaningful impact, but at the same time, it's an organization which is very, very process-driven. So market might have some short-term impact, but I don't see it having any impact on their business from medium-term to long-term perspective.
In fact, Citi's got a sell rating on TCS with a target price at 29.90. They're saying that this resignation has actually come as a surprise to the street. The changes in strategy are going to be keenly awaited and some sort of an interaction as well. But hopes of a continuity from Kriti Vasan are going to be expected. That's Axis Capital, which also has a reduced rating on TCS with a 34.50 rupee target price. Moving on then, Pankaj, wanted to also get in your take on some of the other fresh brokerage notes and in particular on Reliance Industries. We have seen this bout of selling that has kicked in. Jefferies has actually got a buy talking about how there's limited earnings downside, capex peaking out, and that retail as well is likely to see steady growth. Your assessment as to how RIL has performed so far and what the view is?
Is it for me?
Yeah, Pankaj, RIL.
Well, so see, as far as RIL is concerned now, meaning, there was a traditional RIL which was oil and gas, and now over the last 6 years, what we've seen is the traditional business has just become 1/3 of their total value of the business, and the new businesses, which is telecom and retail, have become bigger drivers of business. And I think both those businesses are growing at a very accelerated pace or a much higher rate. And more importantly, they are in the process of transitioning the traditional oil and gas business to what they call new energy business, which will be aligned much more to cleaner fuels and clean energy and zero carbon footprint. So in that sense, I think RIL, from my perspective and our perspective, continues to remain a growth stock. It's a company which can deliver healthy growth because both retail and telecom businesses are delivering very strong growth, and they are at a point where even the traditional business, oil and gas business, is doing well because of the Russia-Ukraine conflict. Refining margins have been relatively strong. So I think stock will continue to do well over medium term to long term.
Pankaj, I'm going to just shift gears and move to something which we've discussed in the past: fintech, consumer tech. Interest rates will come down. Interest rate, they act like gravity for terminal valuations. Given that interest rates will be headed lower in next 1 year or in next, okay, all right, now you can see the man of the moment, Rajesh Gopinathan. Let's cut across.
I'm very happy to announce that after 22 years in TCS, I'm stepping down and handing over charge to Kriti. It has been a fantastic journey for me. 22 years with TCS, 27 years with the group. And it's a period which I've seen and learned almost everything that I know. As you know, we've gone through multiple phases. Early on, the change into the new era of 2001 e-business, many roles. Enjoyed a lot under the mentorship of Chandra and saw him drive this company to become one of the leading, if not the leading IT providers globally. And in the last 6 years, it has also been an absolute thrill to lead this fantastic team. I've always said that it happened momentously for me in 2017, very unprepared. But the way the team stood together, the whole task was made much simpler than I could have ever imagined. And it has been a thrill in the last 6 years also. We have done well together. We've managed to grow to a run rate of now $28 billion. And the market has also been rewarding us. And most importantly, from our employee side, we have continued to attract the best talent, and people love working for us, as it shows through in our retention and our ability to continuously transform. I want to also thank our customers who have continued to trust us and have continued to repose their trust in this relationship, which goes beyond individuals, and it has been with the institution throughout. And that trust has been the cornerstone of our success. And I'm grateful for everything that I enjoyed from the start. And I'm sure that it will also continue as Kriti now takes over. So overall, day of mixed feelings for me. I'm happy where we are. I'm also a bit sad now that the reality of and momentousness of this step is slowly sinking in. But like in all these things, I think once you make up your mind or the thought starts coming into you, it is best to do it early rather than to sit and think about it for too long. So I once again thank all of you, your love, your attention, your questions. It has also been a big motivator for us for egging that performance on. And I'm sure that will continue to be the case with TCS as Kriti takes it on. So let me pause here and hand it over to Kriti, and then we'll be happy to take questions.
Sure. Thanks, Rajesh. Good morning, everyone. It's absolutely a great honor to be chosen to lead this organization. And it's, of course, in my view, big responsibility as well. TCS has been built on two important foundational pillars of customer centricity, as well as a huge set of employees who are always committed and who are given their best to TCS. So it gives us a great platform of growth. And over my 35 years in TCS, I've enjoyed every moment working with this team, and particularly the leadership team who has continued to foster the culture of one TCS and working only for the betterment of TCS, betterment of our clients. And with all the best wishes from everyone, I'm hoping to lead this company and double down on our core pillars of customer centricity, meeting more employees and meeting more customers and making the relationship stronger. Looking forward to working with all of you in future.
Thank you so much, Kriti, and thank you so much, Rajesh. We're going to throw the floor open for questions, as Rajesh said. So I strongly request everybody, for interest of time and so that we can accommodate as many questions, we would request you to stick to one question, please. And of course, we'll be meeting very soon again for the quarter results press conference. So you will have them to answer all your questions. Let's start with ET now. Nikunj Dalmia. Nikunj, you can unmute yourself and switch on your camera.
Rajesh, Kirit, good morning. Thank you for joining us. Rajesh, first my sincere compliments. I mean, TCS shareholders, I'm sure they're mighty excited under your tenure. The company has enjoyed great growth, great P multiples, and really became a formidable force to reckon with in the Indian IT space. But Rajesh, even though TCS has enjoyed a very stable quarter, it has a very stable leadership, the timing of your exit, Rajesh, is something which perhaps is making everybody slightly nervous. At a time when the IT sector is getting bulldozed and concerns are there in the US BFSI space, do you think this timing could have just waited?
Nikunj, if you look at it over the last 10 years, I mean, this is probably the most stable time that we have seen in many years. Think about the financial crisis, think about the pandemic, think about everything else that went on, the war that was started off last year. So this level of volatility, I would say, is par for the course. And yes, there will be some ups and downs. So that definitely is absolutely not a question. In fact, in times of crisis, we have always come together and absolutely stood together as a team. And then when I was reflecting in terms of what would be a good time, I felt that there's no better time than this. And also it was important to do this before the start of the new financial year so that the incoming CEO, in this case, Kriti, has that full runway to play with it. So from immediacy perspective, just before the start of the year so that the whole year can be owned. And from a slightly longer term perspective, we have brought the volatility of the pandemic to a fair state. We have registered very strong growth, first bouncing off the pandemic lows with 15%. And then over the last 9 months also, we have still grown at 14.8% and crossed big milestones. We crossed 7 billion and we are now at a run rate of 28 billion. So when you look forward, I don't think there is going to be another period where there will be significantly difference in that stability for it to be. So it goes back to that question that, you asked it, why now? And I asked myself, if not now, will there be a better time? And the frank answer was, I couldn't think that there could be anything better. And therefore, it made most logical sense.
So Rajesh, the immediate follow-up question is, when did you inform Chandra? What was his first reaction? And how did it go through? And what is next for Rajesh Gopinathan now? Everybody's curious about that. So I'm blending two questions into one.
Yeah, in terms of, I've been having discussions with Chandra off and on. And of course, when there is an immediate problem, we always focus on that. But in moments of retrospection, I've always been telling him that, at some point I want to do it. And so that's been an ongoing dialogue. The immediate one was, of course, that, as I said, and I think this is the way it happens with everybody probably, that one day you get up and then you say that, okay, we have thought about it and spoken about it long enough. It is better to, pull the trigger, as it were. So that happened just a week or so ago. But it's a conversation that has been ongoing. What next is, first, I have to make sure that the transition happens smoothly. And with Kriti being there, I don't think that is a challenge at all. But I owe it to all our customers, all our colleagues, our employees, and all stakeholders to make sure that I am there for whatever time that Kriti needs. And if nothing, it might be even symbolic. But I definitely have no plans to skimp on that, and will be available to Kriti 100%, not just during this transition period, at any point in time in future. After that, I want to take some downtime and spend some time with family, sit back and then think, many ideas are there. But now that the trigger has been pulled, I need to start crystallizing what those are. And it would not have been appropriate for me to go down that path while I was doing something as important as this, and which required more than 100% of my attention all the time. So that's the plan. So probably we will get to catch up and have that cup of coffee that we have been always talking about. And I am looking forward to some downtime.
Thank you. Thank you, Nikunj. Thank you, Rajesh. Reema Tendulkar from CNBC. Reema, you can try to switch on your video and audio and join, please.
Gentlemen, with a heavy heart, I'm, asking these questions, Rajesh. I'm truly going to be missing all our conversations every quarter talking about the numbers. So while you tear up, I've got a very heavy heart as well. But Rajesh, my first question is, when you chatted with Chandra about succession planning at TCS, who next? What were the thoughts? What were the conversations like? I know TCS has had a policy of promoting the insiders, but could you help us, talk about what led you all to narrow in on Kriti as, the next CEO? What were the qualities? Why did you select Kriti? That's, point number one. And secondly, in the next 6 months, what are the steps that you will be making sure to ensure that the transition is going to be extremely smooth? And Kriti, my question is, what would be your top 5 priorities now for the next 5 years? Will reversing TCS's underperformance versus Infosys be a priority? Will you be looking to change the margin guidance? Any big strategic changes, any big changes in the organization that you would like to effect? Thank you.
Thanks, Reema. It's very nice to hear you say that you're going to be missing it. We used to be dreading your 5 pages of notes, and it was easier to navigate the board meeting than the day after. But jokes aside, it's always been a pleasure. As I said, it's something that kept on egging us on. Your question was that how did we narrow on to Kriti, right? See, in TCS, we have a very transparent and very cohesive culture. We have always said that it's been about collective leadership. So the board has very high visibility to a very large part of the leadership team, and there is very close interaction on an ongoing basis. So the top 10, 15 people get in front of the board many times a year. There is a lot of interaction. And plus, of course, Chandra, as the chairman, knows each and every one of them personally, professionally for decades.
press conference that everyone was looking forward to, and we will get you some more snippets as well. But for now, Rajesh Gopinathan saying that it's been a very stable time, so no better time than right now to make that transition. Let's cut right back across.
Great. We have Swati Khandelwal from Z Business. Swati, you can take your questions and switch on your video.
Thank you very much, gentlemen. And of course, it's a mixed day, as you said. We have Rajesh going and we have Kirti coming in. So welcome, Kirti, and good luck, Rajesh. But very quickly, Rajesh, the number of years that you said you spent at TCS, and especially in the last 5 years, from where you've got the company, and you've talked about the road ahead. But one moment or one when you look back, what is the one big achievement that you think you are taking with you and you're very proud of? If you can tell us that. And of course, people have already asked you what next for you, which is still under wraps, so we will have to wait for it. But your biggest achievement, biggest takeaway as you will move on from here. And I'll ask Kirti once I have your answer.
Swati, actually, I was smiling as I was listening to you. I never wrote my resume after campus. And on campus, batchmates will know that we used to have a repository. One instance of leadership skills that you showed, one great learning that you had, one failure that you had. I have had no practice in doing that for the last 28 years. Haven't thought about it. Let me say that TCS has been integral to who I am. The group has been integral to who I am. I had never any second thoughts throughout my entire period, and looking back also, I would not have done anything differently. And as I said, irrespective of what I do, where I am, throughout my life, TCS will be a very integral part of who I am. And I do hope that in my own way, I've contributed to TCS, so that I'll also be an integral part of TCS, irrespective of all the great heights that TCS will go to and will continue to soar. And so that is something is my biggest pride and biggest happiness, that we have been together, we have built something of lasting value that we believe in. We have strongly stood together. We have not followed the herd. We are leaders. And most importantly, we are friends and we work together to do something that we are all proud of. So that's my greatest takeaway from TCS.
Okay, sure. Kirti, quick.
All right, the man of the moment then, and Rajesh Gopinathan fielding questions then from the media as of now, saying he asked myself, if not now, then when will there be a better time? We will, of course, keenly watch out for what the stock price reaction is going to be. It's been a mixed reaction when it comes to the brokerage. Some of them are a little bit cautious on what this news could potentially mean for TCS, at least in the short term. Sandeep Sabharwal as well as Sandeep Agarwal are both with us to take this conversation forward. Sandeep Sabharwal, I'm going to come to you. I'm sure the street is going to watch out for what exactly is going to be the strategy, or really, the continuity with this change of hand. What do you think the street would like to hear the most?
So I think the management has spoken, and in my view, although because it's a sudden development, there could be some negative reaction in the very short term. But given the strong bench strength that a company like TCS has, and even the transition from Chandra to Gopinath, the way it happened quite smoothly and the company remained on the same kind of growth path, specifically this issue should not create any significant downside to the stock in my view.
Okay, and so do you believe... Sandeep Sabharwal, going to come to you again. Do you believe that that it's only going to perhaps be some sort of a knee-jerk reaction right now in the stock price? As you said, it is only going to be for the short term, and that by and large, when it comes to any sort of a dip in the stock, do you believe that would be a buying opportunity for a bellwether?
No, that's a different question, because that brings about the view on the stock and the sector. So my view on the sector overall is not very positive, given the fact that I see significant uncertainties next year on the demand front. So overall, I am very underweight on technology stocks, and to that extent, I am not looking to buy right now. However, if a stock like a TCS or Infosys, or for whatever reasons, corrects 10 odd percent or from the current levels, then I could be looking to buy.
Sure. Sandeep Agarwal, you think that's going to happen considering the fragile sentiment right now with the IT space? And more importantly, we heard from Rajesh Gopinathan saying that the worst is behind us. They were off from COVID, war, everything, and he didn't think there was a better time to do this. While the worst may be behind, the best may yet to be, yet to come. But should investors look at this current opportunity of underperformance within the entire IT sector and look to buy TCS now if the stock were to fall?
No, so I firmly believe that, this stock won't fall much. Maybe, 1-2% volatility, I wouldn't rule out that can happen any day on any stock. But beyond that, I don't see a volatility related to this news. As I said, that while not diluting the impact of Rajesh, I would say that the deep bench strength for leadership which TCS has built, and as I would reiterate that only four CEOs have been changed in last so many years before yesterday. So it reflects upon how well the team is and how much stability is in the organization. I won't see this as a reason for the stock to move much. Having said so, I would say that if there are no big problems from the US banking system and if there is a stability there, I would say that IT stocks have corrected more than required already. And now with attrition stabilizing in a big way, I would say that, going forward, the earnings would surprise or would surpass revenues in a big way. So we may see mediocre revenue growth, but much higher PAT growth, because if you see all the last few quarters, because of high attrition, the margins have been under immense pressure, which should now ease off. So that is the way I would put. So I would say that this is a great opportunity to buy.
Agarwal, good to have you on the show. We'll let you go on that note. But Sandeep, back to you. The overall construct of the market, while today, of course, we may be looking at a bounce kicking in, looking at the global setup, but it seems like the market is getting into that zone where every uptick as well is getting sold into, as was the case yesterday or for that matter, day before as well. What are you making of the market fragility right now, Sandeep?
I don't think we should be too much bothered about it. I think such fragility gives opportunities for long-term investors to buy stocks cheap. And I think such opportunity is presenting itself, especially in the short term in large Indian banks, and then going forward in many other sectors and in mid caps, small caps, etc. So I think India's macro construct is one of the best in the last many years. And to be negative right now doesn't make sense. So I would think that upside potential to downside risk ratio is quite well placed for investors.
So Sandeep, let's get a list of where is it that one should shop, the long-term investors.
I think starting off, because large cap indices have actually corrected more than the mid cap indices. So I would think that to start off with the larger banks like Axis, ICICI or SBI, I think that makes sense. I'm positive on capital goods, but then there the correction has not been there. In fact, those stocks have and infra stocks, so those have held up and they could actually outperform. So there one could consider like L&T obviously is at the top of the list. And then auto stocks have given up decent gains, the four-wheelers because of the overall market correction, some concerns on monsoon, etc. So there also valuations are reasonable. Stocks like Maruti, Tata Motors, Mahindra and Mahindra. So I think they should be the picks right now. Export-oriented sectors, I am still a bit wary. So we'll look at that sometime down the line.
We've also got Shivangi Sarda who's joining in on the technicals. Shivangi, morning. Let's get in your take first up as to what the outlook is when it comes to TCS basis the chart patterns.
Good morning. Thank you for having me on the show. When the overall market has been a little dampened, and so is this entire sector. So, IT pack is one such, a pack which has seen a lot of weakness from the last 4 weeks itself. TCS is also a heavyweight which has given up a lot of its gains, and it used to have a firm support near 33.20 zones, which it has broken and now trading much lower. So I believe there will be some sort of more weakness over here before the stock could again, bounce back for a good up move. So we could wait and watch for this stock to touch around 3060 levels, and then resistance near 3250 levels.
Okay, that's the view coming in on TCS. Meantime, Kunal, let's get in your take then as to how you're reading into some of the mid-cap IT names as well on the charts. Is there anything that's standing out?
So I think Redington is one stock which looks attractive. The stock has been holding on to its 200 DMA for major part of the last 3-4 months, especially when at a point when the mid-cap IT stocks rallied and then they got into a corrective phase. Most of the other IT names like Coforge, L&T Infotech, Mindtree, etc., these stocks have come back to their previous, multi-month lows. I think September or August lows for themselves. So that's an indication of weakness. There are very few names which have actually held on to their 200 DMAs. So Redington is one stock trading at 160 approximately. I would expect that whenever this, the mood in the mid-cap IT stock stabilizes, I would believe that this could be one of the first stocks which can actually come back to its previous life highs of 190, 200.
Pre-open session, the gains are gone. And again, when global markets are good, we don't react. When global markets are bad, we overreact. That's sign of weakness, guys. That's sign of weakness. I mean, you should have reacted on the positive. No, it's up now. Okay, let the rate stabilize. I will not comment too much on it. Sandeep, how much of importance would you give to the fall in oil for us? Today, nobody is talking about it. Everybody is now suddenly expert on what Fed would do, US job data. We are over analyzing everything in America, and we are not analyzing our macro. So it's like we are global macro experts and ignoring the local macros now.
Yeah, in fact, I was very surprised that there used to be a set of people every time crude oil will fall, they'll come and make huge bullish statements on how it benefits India. But this time the statements have been totally missing. Actually, it's a very significant macro positive. So, and need to also understand crude, a lot of other commodities also fall, and that also benefits inflation. So overall, I think it's a
That's why we've got you, Sandeep, that since nobody was talking about the underlying bullishness for Indian economy because of fall in crude, I thought we might as well prompt you to speak on that.
Yeah, so I said it.
What happens to IT now, Sandeep? I'm asking this why, because the sense what we've got, at least from large IT companies, is that, okay, there is a problem, but the latest round of problems in terms of the US banking sector crisis or European banking crisis is not having impact on the business. So do you think this is one of the moments where if you bought into the fall in Indian IT, you would be rewarded 3-6 months from now?
I would still think that many of the analysts still remain too optimistic about there being no impact of all these developments. It's highly improbable. I think their decision making does get slow in such kind of environment. Projects do get deferred, and that will have an impact on growth for next year. Now, if there is a correction, will that provide an opportunity? Yes, it will, because these are huge cash generating companies paying out huge dividends, doing buybacks, etc. But for export oriented industry, especially technology, where there is huge over ownership among investors, I would still like to wait it out.
Now, yesterday the stock of Varun Beverages fell, and there's this whole fear that could there be a cola war. Campa Cola by Reliance could have impact in terms of the underlying pricing of the cola being sold in India. Only company which gets affected is Varun Beverages because of their relationship with Pepsi. The stock yesterday fell. Sandeep, is it a good time to buy into Varun Beverages? I mean, it's been an outperforming stock. We don't know whether the cola war is real or not, but ultimately a company like Varun Beverages will continue to grow as there is hot summer and more beverage demand.
Yeah, so I think disruptor entry does have an influence on stock prices in the near term, but I would think that it will be tough for Campa Cola to come back and gain a very significant market share. So to that extent, actual impact might be lower, sentimental impact might be higher. So, but in the near term, given the valuations of Varun, we could still see some correction or a phase of consolidation. So it's not that people need to jump in today.
Defense stocks will also be in the spotlight today. And Sandeep, wanted your quick take on that. The Defense Ministry has approved a proposal to acquire weapon systems worth about 70,000 odd crore rupees, and major beneficiaries are going to be HAL as well as BEL. Your views?
Yeah, so I think that story continues. So after 2,70,000 odd crores announced earlier, 70,000 crores more. I think the story for these companies continues to improve, and on dips or corrective moves, these stocks obviously are good to buy. So BEL has corrected decently from the top. So on a purely a valuation paradigm, that looks better placed right now. Although HAL story is actually stronger.
Thanks very much, Sandeep, for joining in and sharing with us your outlook on the markets. All right, a quick glance at the pre-open rates, and no surprises then to see that 17,100 mark, given the kind of handover that we've been given from Wall Street. So let's find out those mid-cap strategies then. And Shivangi, take us through your top mid-cap call.
So talking about mid-cap name, we've seen that RK Forge is one such stock which is resilient in such kind of a market scenario. And we've seen that, from the last 1 month, we've seen that it has recouped all its slight losses of the February month. And overall, it has been moving in a very good uptrend from October last year. So overall, the stock is quite strong and, standing very well. On daily frame, we've seen that from the last 2 days, the delivery volumes have been quite high, which is promising a potential upside. It surpassed its previous hurdle of around 278 levels and holding well above those levels. So recommending a buy here with a target of 295 levels on the immediate side with a stop near 278.
Shivangi's bet. What about you, Kunal? What is it that you're looking at on the charts?
So Manappuram is the stock which I believe is heading towards a classical bottom. The stock formed a previous space, I think closer to 100, 102 mark, went up to 118, corrected back towards 107.8, and now I think it's forming another base which is much higher than the previous lows. Chart patterns are very attractive. The previous rally was very strong on the back of some extremely strong volume. So that indicates that there should be a retest of the previous high, if not a breakout of the previous high of 118 plus for Manappuram. So traders could look out for at least a 118 target for the stock. Stop loss for this trade could be kept at 109.
Okay, let's tell you what else is happening outside the world of business and markets, given that we're playing for a recovery, at least to start off trade with. BuzzFeed has transferred cash out from the crisis-hit Silicon Valley Bank, or SVB, to other financial institutions. Now, this comes days after the digital media firm stock slumped on news of its exposure to the troubled bank, and the company's stock was over 4% lower in aftermarket trading yesterday. Remember, the company's decision to move its money comes despite the FDIC saying and guaranteeing that all depositors of SVB will have access to their money. Also, UK, following a similar decision taken by the US, Canada, Belgium and the European Union, is also banning TikTok from government devices over security concerns. According to UK Chancellor, the app is known to extract user data outside the app itself, which is the source of concern for many Western nations. And after the much-awaited launch of China's Baidu unveiling its AI-powered chatbot, Ernie Bot, this comes after Google, Microsoft have all stepped up the AI game, but it has also disappointed the investors due to its use of pre-recorded videos and the lack of a public launch, which eventually led the fall in shares overnight.
Meantime, the Maharashtra Chief Minister Eknath Shinde and the Deputy Chief Minister Devendra Fadnavis had met a delegation of farmers as thousands of farmers continued their march towards Mumbai from Nasik district to press their demands. However, the meeting ended with the delegation agreeing not to hold the march at the borders of Mumbai until the state's orders are implemented at the taluka level. And Mumbai, along with several parts of Maharashtra, actually experienced light to moderate rains. The IMD has said that the quantity of rainfall in Mumbai was below the measurable limit. It also predicts that the rains will continue this weekend. And some more important news flow on the Shiv Sena verdict. The Apex Court has reserved the order on a bunch of cross petitions with respect to the Shiv Sena-centric Maharashtra political crisis. A 5-judge constitution bench reserved the order on the conclusions of the arguments by both the sides. And to the world of sport, it's going to be India versus Australia ODI series that begins from today. It's a 3-day match. The one-day international series follows the conclusion of the Test series. This is the first match that will be played at the Wankhede Stadium.
Okay, that's making sense of the chaos as per some of the market experts. This morning, bit of a relief, 17,100 back on the ticker. So let's tell you what the index calls and the consensus ideas are from most of our experts. And the Nifty calls this morning, Santosh Meena, C.A. Rudramurthy and Kunal are all indicating a buy call when it comes to the Nifty. What about the market moodometer? The tilt clearly is in the positive given the recovery that you've seen, not just with the pre-open, the SGX or for that matter, even the global setup this morning. It seems like a bounce is very much in store. For the Nifty Bank as well, it's a unanimous buy from Santosh, from CA as well as Kunal too.
Kunal, what are the chances that a good start may just be sold eventually into? I mean, Dow futures could go down, European markets could go down. So it's tempting after this gut-wrenching fall to play for a bounce. But is that a good strategy?
Yeah, I think it's a very good strategy, Nikunj, first. And I believe that the chances of the opening gap selling off is very, very dim today because the outlook is completely different. So 2 days back, there was uncertainty. Yesterday, there was a bit of a fight. Today, there's more confidence in the market. And I think that could probably result into the index not just scaling up higher by 100 plus points. My sense is that we could probably be closing in maybe just around that 17,200 mark on the spot level. So I would probably expect another 50, 80 points on the index. And I also would probably be looking out for the kind of stocks, large cap names. So my sense is today the large cap stock should make a strong and a very durable comeback for themselves. Now it's just that we need to span out, check out which are the sectors and which are the individual large cap names which could probably lead into a rally, whether there's a short covering wave or whether there is a built up of long formations as well, which happens. And I think that could probably give us maybe some indication of whether the markets would have a leg up on the upside over the next couple of weeks. So I would probably be playing for the bounce, and even if the indices open up with 100 plus point of a gap up, I think it's a good time to enter into that.
So 17,300, 17,350.
Exactly.
So because you will get a 100-point gap up start. So you will start at 17,100.
Correct.
And on top of that, you need to make at least 100 points to make it a durable trade, right?
Correct.
Which means you are looking at a level of 17,300.
300.
And then what?
Then we'll see.
What would happen in the first 1 hour of trade?
I doubt it'll happen the first 1 hour of trade because see there'll be a lot of adjustments. So when markets go into such a sharp sell-off, the risk-taking ability for clients as well as for the brokers is not very high. So whenever the markets go up, there is always a parity of a reduction of risk. That settlement takes maybe a couple of hours. So I don't expect the markets to go into a rara breakout immediately in the first hour or so. There will be a lot of opportunities even from an intraday perspective.
Right. Shivangi, very quickly, what do you think is going to lead the recovery today? Will banks have to participate, and will the underperformance of metals and IT get undone?
I feel that in this kind of a market scenario, oil and gas space has been one such space which has outperformed and quite resilient, among which I am liking MGL. This stock is coming out of its consolidation of the last 7 sessions. And after the breakout, we've seen that follow-up buying was also seen on the weekly frame. So stock is quite positive. There is a slight positive divergence on the RSI front as well. So recommending a buy here with a target of 1030 and a stop near 965.
All right, 50 seconds, and then hopefully a lot of green today for a change. Let's see if the early morning strength sustains. For me, what really matters is the word sustainability and durability. You built on, after a gap up start, we've had good gap up starts. Yesterday was decent, day before yesterday was decent, but in the second half, you were sold into that. So you walk into trade this morning, the bond yields are stable, the dollar index is stable, Brent prices, yes sir, they are at 74. This is not NYMEX, this is Brent at 74. I mean, that's the OMG moment, isn't it? $10 in crude in a matter of 3-4 days. And this is something which incrementally, once the dust settles down in global markets, is something which is going to be a big hurrah for us. First rates will just start kicking in any second now, and I'm just going to, scan through the first rates. There you go, first rates on your screen now. For the Nifty and for the Bank Nifty, it is a good start, and it is a decent gap up start. The breadth is looking formidable. Formidable is the word. I really hope it sustains. The small cap index is up, the mid cap index is up. So today we have a proper bounce across the board in terms of the market breadth, and also what do we have in terms of the market setup. Now TCS on expected lines, it's a cut. It's a cut of 1%. But a organization like TCS, the succession planning, and this is not a forced, this is not a forced exit. This is a planned exit. Means that the succession planning is something which will not really have a large impact on the business per se. The only problem is that TCS has been commanding high PE multiples, and that in a sense now in the short term could get challenged. I want to revisit Infosys also and the IT index per se. And bear in mind that if TCS would have not gone today because of the news per se, then the IT index would have looked very different. But meanwhile, Infosys is bouncing back, Tech Mahindra is bouncing back. There is an uptick which is clearly visible in other IT stocks as well. So the strength, I think, is there in IT. The strength is there in banking. The strength is there in fintech stocks, and the strength is there in even some of the PSU banks. So good day, Aisha. It's turning out to be a lot of green.
Yeah, and I'm intrigued by TCS. I don't know if we can bring up that intraday graph or not, because the first tick was less than 1% lower, and we've recovered most of our losses in TCS. It's already back at those 3170 plus kind of levels. Samvardhana Motherson, that's looking to acquire the remainder 50% in Fitzmer Motherson Cabin for 111 odd crore rupees. That's another stock which is in focus this morning. Then, of course, there's NTPC as well, wherein reports are indicating that Malaysia's Petronas has offered $460 million for a 20% stake in their green energy arm. NTPC has started off quiet at best. The big buzzer from yesterday, Z, which is now exploring strategies including settlement and reports on IndusInd Bank. Speculative is what they say. Z is kind of undoing yesterday's losses. Gains rather, 2.5% lower for Z as we speak, although the stock, of course, shot up much more yesterday, was holding up 9.5% yesterday, remember. There's Bajaj Finance as well. Anup Saha and Rakesh Bhatt have been appointed as executive directors for 5 years. HAL and Bharat Forge Defence Acquisition Council has approved a proposal worth 70,500 crore rupees. Focus clearly back at defence as a sector. RVNL once again emerges as the lowest bidder for a project worth about 111 odd crore rupees. And then Glenmark Life as well, which has declared a dividend of 21 rupees per share. Another order, 800 odd crore rupees for Viatech Babag for a project in Bangladesh. These are a couple of stocks which are in focus. But IT actually is a leader sector this morning. Much unlike the case There was the past couple of trading sessions. Infi is now holding up in excess of 2%. TCS, let's bring up that stock up for you on your screens once again and show you what it's currently doing. It's settled around 31.75, which is really not that bad considering how the news flow was and how it took everyone by surprise. So I would say it's a negligible or no reaction whatsoever to the leadership change at TCS. What about the crude sensitives? That's where the trend seems to be moving. BP, HP, IOC, Asian Paints, what have you. That entire pack will just come up for you on your screens next. BP is a little softened after that 6% move on the stock yesterday. IOC holding up 0.6% and Asian Paints should come up for you on your screens next. That's an important one. But Kunal, not bad a start for the market, but again, feeble. You don't know whether we're going to stick by to 17,100 or not.
I think it's a good start for the index. I'll probably look out for going, more charged up into this kind of a rally as well as an upward trend. And I would look out for building more large cap names. So the stock which specifically I would look out for would be from the large cap front. SBI, for example, is one of the stocks which I believe could probably play out quite well for itself, turning around, going into a strong, rather it's already underperforming, but I would believe that the stock could probably catch up the major speed of the underperformance as compared to the other PSU bank majors. So SBI is the stock which I would look to buy.